Good evening and welcome to the Australian Stock Market Show. The Australian stock market continues to be volatile, and that's great for making quick profits. The challenge many face is generating a watch list of stocks that are more likely to make you money. Here at Wealth Within, we know you like to make good profits, so in tonight's show we take a look at 10 stocks to get you 20% profit. We'll also get into the common question about market depth. Is it valuable or a complete waste of time? We'll also get into rare earth stock, ARU, and many more. First up tonight, we'll share our hot stock tip for the week before diving into our view on the major world currencies. So sit back and relax. Tonight will be jam-packed as we answer your emails, take your phone calls, and give you the answers to some of the most important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillam, your host for tonight, and joining me is Janine Cox, and we are Australia's most trusted stock market educators.
Well, great to be here. Now, Dale, I know that our viewers are just as eager as I am to see our weekly hot stock tip, so how about we get straight into it?
Well, that was quick. No beating around the bush tonight, is there?
You know me.
Boy, do I know you sometimes too well, I think. All right, so I want to get into the stocks of the night. On the screen, I'm actually going to talk about Paladin Energy. Now, I want to bring up a couple of things. I want to talk a bit about announcements, how they can actually affect the stock, but I'm going to bring up the monthly chart, which is here on the left. I just want to show a couple of things that we do here, and I'll just bring that up so you can see it a little bit better. All I've done is just some basic work on the stock, looking at from low to low to low, which what I did on that top 20 stock review I did for Talking Wealth, and shown things about when they move up from low to high to low. So you can see here it's roughly 36 months, 33 months, 38 months. So we recently hit a low through here at 36 months or 38 months. So I think it's looking pretty good, and it's had that nice little consolidation type of pattern, finding some support around that 65 cent mark right through here. The next one up here is a long-term resistance at $1.41. But if you look at that, that's a hell of a long way from where its current price is in percentage terms. If we look at that, there's 85% there. Now, looking at it from a point of view of what we would talk about in terms of buy and sell signal, let me just expand that up a little bit and get rid of, there you go, so you can see it a little bit easier. We've got a monthly trend line down through there. So anybody who's read my first book would know this is a monthly trend line on the stock, and should it break through that and close through it on any month. So if we get this bar currently, which is July, if July closes above here, and there it constitutes a buy on my first book. Obviously the same in my second book. So it's looking quite nice, because that's a really sort of nice consolidation pattern here on the stock. So it's quite possible, but we may see it just bump its head and then come back down to this line again and get closer to the apex of these two lines. So we could see it keep moving sideways for a few more months. That's why we need to see it close above it. But I want to go into the weekly chart and have a little bit of a look at that. And you can see here, this is that same pattern on the weekly chart that I showed you there, and I've just used it as a dashed line, because whilst it's a trend line on a monthly chart, it's not necessarily a valid trend line on a weekly chart. But I want to share with you something. You see how it spikes in volume through here? But this is an interesting one through here. Now, we've got a trend line up through here, except for that bar. This would, if that bar wasn't there, this dashed line would be a valid trend line on the stock. But you can see here the range on that bar is 67 cents on a stock that opened at 67 cents.
You can't ignore that. You
just can't ignore that. So I went looking for it and going, okay, what actually happened on that bar? Because you can see 209,538,000 blah in shares. So I wanted to go and have a bit of a look at that, and I went through, there was the one-day movement through here on the 30th of May. So I went to have a little bit of a look about what actually happened around here, and the media came out and said that the government, I think it was Malawi or one of those African countries, said they were wanting to have a shareholding in the mine, one of the mines that these guys were opening up, which turned out to be false. The media picked up something false, and the company came out on the 31st of May, this day, and said, no, that's not happening, etc., etc. And the government even come out of the country and said the same thing. So it's completely different in terms of what's happening to the share price, because the share price just went on its merry way. So I think when it gets above this sort of level here, above that high there at 79 80 cents, above this sort of line, I think it's not bad. I think it should be a good one. That's my tip.
Okay, fantastic. Well, that is it for our weekly hot stock tip. If you have questions, you can call us now on 0392909988. That's 0392909988. If you prefer to text, send your question to the number on your screen.
All right, now the first caller into the show right now will get a free copy of my book, Accelerate Your Wealth. Remember, we always put phone calls above text for answering questions, so pick up your phone and dial 92909988 right now. Now, while you're doing that, tonight is the 4th Tuesday in the month, which means we look at world currency. So let's get into the charts, Janine.
All right, on your screen there, you can see
on your screen,
I took
right?
your line. Sorry about that.
Well, not that you...
I'm just so excited about it, aren't I?
I know you're excited, but the guys play this fancy thing and you're talking over the top of it, so which means I'm going to
They're
get...
going to smack me for that.
No, they're going to slap me for letting you do it. So can we have a look at this now?
All right, yes, we can. Okay, so here we go. We're looking at a monthly. Should we look at the month and the year this time? Because we've been looking at the yearly.
You're running the mouse, so you
you're
can do
going to
what
let
you
me.
like.
Okay, so we're looking at the last month. Now we can see it on the monthly time frame. The Australian dollar versus the Russian ruble is leading the board, so up 2.89%. The Australian dollar versus the US dollar is up 1.3%. I'm just going to look at a couple of these, not the whole lot.
And then we're going to look at chart.
If we go down to the bottom here, first of all, we can see the negative Australian dollar versus the Japanese yen. We're actually down 0.55%. Aussie dollar versus the Singapore dollar down 0.67%, and the Australian dollar versus the Swiss franc down 1.54. So I just want to quickly switch to the yearly so we can have a bit of a look at what the difference is there across the board. And we can see there the Russian ruble still leading. So the monthly, the Australian dollar versus the Russian ruble, that's the biggest move for the year and the month. But then the data changes, so you'll notice the Aussie dollar versus the Japanese yen's moved up to the top, up 6.68, so it looks like it's slowed down for the month. The Aussie dollar versus the Chinese renminbi yuan's actually up almost 3%, and the Aussie dollar versus the New Zealand dollar's in the positive. So all the rest that we're looking at on this board here, even the Aussie dollar versus the British pound, that's a huge difference, isn't it? We're actually down 6.7.
But we're still in the normal sort of range for it though, aren't we? I mean, if you're looking at the Aussie New Zealand dollar, $1.08,
50.
it's about normal.
Yeah, that's
somewhere
true.
in that $1.10 mark-ish is sort of normal for the Aussie New Zealand dollar spread. And then the British pound, 50 to 60 pence per Australian dollar is pretty normal.
Well, the one that we want to talk about tonight is the Aussie dollar versus the US dollar, which is line ball. So
it says line ball.
Is it, what you're saying is there's no surprise to you there that
No.
that's the situation. So if we then go to the chart and have a look, we can see that this is the monthly chart of the Aussie dollar versus the US dollar. And ordinarily, if you saw a chart that was pushing down the way that it has, you'd be expecting now that this is an indication of it finding support. But quite often with currencies, they'll trade sideways for extended periods of time before they then take off again. So it's not to say that even if this does look quite positive, it's not to say that we're going to see a move in a positive direction. And I don't think the RBA wants to see our currency moving too fast anyway.
Well, they don't. I mean, if you look at this outside of this sort of anomaly back, here in February 2020, the Aussie dollar's been between roughly 80 cents and 60 cents US for 8 years. So, it's just ranging. So at the moment, you're thinking it's a little bit more bullish and it could rise.
Oh, look, it could, yes, very well rise.
All right.
Well, that is it for our thoughts on the world currencies. Next, we have some great stocks to share with you, including ARU, 1GC, BHP, BSL and CPU.
All right, Janine, now let's get into our first email. Now, our first email is from Anthony, and he says, "Hi, Dale and Janine. For the next show, I was wondering if you could please take a look at ARU. After the recent downtrend, I think some support has formed around 30 cents. and if it could break around the 36 to 38 cent mark, it may be on for a period of recovery. Always happy to hear what you guys think, and always happy for your insight that you provide. With regards, thanks, Anthony.
All right.
Wow.
Well, look, this is a really interesting stock because I can see a nice rhythm happening there. We've got the monthly chart open there. Notice how we see this spike, it goes down or sideways for a while, another spike, down and sideways for a little while, spike down, and this repeating process of these quite volatile movements. But what's really out of character for the stock is this decline. This sort of decline it hasn't seen for some time now. Let's just have a look at the degree of it before we answer the questions. 56% fall. So, you know, it doesn't exactly shine a light on being bullish right now, does it?
Well, it doesn't sort of suggest it's got support either, because at the moment all we're seeing is red bars. Now, open and closing down the bottom of that, but if we go to the weekly chart, they may be thinking it's getting some support. Now, I don't know when they sent this email through, but it would have been in the last week. But since in the last few weeks through here, so even if they sent it here, I still don't think it's got support. So I don't necessarily agree with their take at this point in time.
Well, what would we need to see? I guess that's the real point
A
here,
lot more
isn't it?
stronger signs than that for me.
So, I mean, looking at it here, a nice little move above this high, 34 cents, would be the earliest sort of sign that it may be on its way back up again and this support might hold. So that's what I'd be looking for in the short term. But you've got to wait quite a while to get an entry on this at the moment.
Yeah, I think so. I think any entry right now would be high risk in my book. That's what I'd be thinking.
Yeah, I agree with you. But look, at the same time, I still like the stock from a big picture point of view. If we just turn that back into the monthly chart, just this repeatability of these moves is what you want to look for in a stock. So it's not
but if
to
you
say
look at that,
it could take off and trade up somewhere between 40 odd cents and 50 cents again.
could. But you look at this move up, came back about half the distance. This move up came back about half the distance. This move back up came back half the distance. This moved up and it's come back nearly 100% of the distance.
Out of character,
Completely different in my book. So will it come back further? Will it have a bigger move down? That's what I'd be thinking at the moment. And based on limited knowledge of this, I mean, end of the day, we could say, okay, well, here's sort of a momentum line, roughly. So it's coming back to that, but will it break through that? It's possible. And again, I don't think I'd be touching this with my money unless it gave me a lot more stronger signs.
If this month's bar, the close on this month's bar reversed up strongly
if that
towards
closed
the top
up there,
of the bar,
I'd start changing my mind.
Yeah.
But unless I got a strong close, I'd probably sit on the sidelines and wait, because I don't think, I'm not seeing enough signs that it is finding some support at all.
Okay.
And why it would find some support where it is.
Yep.
That's
Not
what
yet,
I'm
it's
thinking.
too early is what you're saying.
Yeah, it's too early, that's what I'm thinking.
Okay.
How's that?
Very good. Now, before we get into analysing more great stocks, please share your support for the show by hitting that subscribe button on YouTube. And whilst you're there, remember to hit that like button, as it helps others like you to find our content. It also shows your appreciation for the team who put a lot of work into producing this show.
Now, just before we get into our next email, remember you can grab a free copy of my best-selling book, How to Beat the Managed Funds by 20%. All you got to do is pay the shipping. It's full of great strategies that that will have you profiting more from the stock market, no matter where you live and where you started from. Now, just head over to wealthwithin.com.au and click on the link on the homepage. Now it's time we get into our next email for the night, and this one is from Glenda, I believe. Now, Glenda's saying, hi, Dale and Janine. I'm someone, thank you, parents, who has 10 by 200,000 plus parcels for my shareholdings, with half currently in shares. She goes on to say, I'm finding that larger parcels can be hard to fill. One issue I have is that when I check the stock's daily liquidity, it is high enough for the parcel I am looking at, but the market depth shown on the broker site is very low. If I enter my bid at market value, the purchase could be a lot higher than the current price. I'm unsure as to how this actually works. A fixed bid shows the large volume to sellers. If they think like me, they won't offer a slightly lower price to ensure a sale. Have you got any ideas why? For example, REA ranked number 24 on the ASX, which is trading too high at the moment, possibly on a pullback, had a 22% 2.3 million sales on Friday, but even at the beginning of each day, the market depth shows that even buying half a parcel would take it to over 1% above the current sales price. Others say AGL ranked 87 or EDV ranked 46 have a similar day sales total, but only need to take my bid a couple of cents higher to purchase my parcel. Thanks for all the great information you share, Glenda.
That's a really good question.
It's a
Interesting
great
one,
question.
isn't it?
Yeah, it's a question a lot of people have because they don't understand the depth of the market at all.
So what would you say about, because my first thought was, who cares if it's about 1% or so away
Yeah, well,
when you
that's
fill
true.
it?
I
That's
don't
the
care
first
about that.
point. You're not going to be too concerned about that because you're talking about the long game, not the short game, unless
Correct.
you're trying to sort of, inch small amounts of money out of the market, which isn't really the strategy that you would want to
Correct.
take.
Now, as long as you set a limit price, if you're worried about it, you just set a limit price for your order. But one thing people look at, and the market depth is way overlooked at by most people. And Glenda, it's completely irrelevant. Unless you're trading illiquid type, sorry?
Yeah, exactly. I was going to say the same thing.
Unless you're trading illiquidity type stocks, and AGL and that is not an illiquid stock, it's completely relevant because the depth of the market is completely fictional. And I mean by that in terms of you don't know the liquidity of the market by looking at the depth of the market. And the reason why I say that is because most of the shares being traded you won't even see on there because the big players just sit behind that. And for example, Janine or I may be trading $1, $2, $3, $4, $5 million of any of the shares that you mentioned, and we won't put the whole trade on or buy the whole trade or sell the whole trade into the depth of the market. So we won't place the trade. We might only place 1/10 of it. And as that goes, we put another 1/10 of it and another 1/10 of it, another 1/10 of it. So don't ever think that is what's available to buy and sell. That's just not what works. What
there
you
are
need
dark
to do
pools. We could tell her about the dark pools.
yeah, there's dark pools, but that's not really relevant for a retail investor.
It's all the algos that are.
Yeah, it's all the
pushing it
algos
through.
and stuff of that. But what I'm trying to keep it simple is before the market opens, it's 100% fake, that whole depth of the market. So don't even look at that because anybody can place a trade at limit on at 10 p.m. at night and then take it off at 1 minute to 10 the next morning before the market opens. So, and that does happen. People put them on, or institutions might put them on and then take them off. But during the day while the market's trading, it's not what's there. There's a lot of money sitting in the sidelines, just drip feeding in. There's all sorts of algorithms might drip feed in. There's other players that might break up parcels. So if you've got
I
a
think
good
your
liquid
point
share,
too about putting the limit in is
Just
a
put
good
the limit
idea.
in.
Put the limit order in.
yeah. And if you don't want to buy the whole parcel in one hit, buy them in 4 or 5 parcels. It's up to you. But that's pretty much what I want to say.
Fantastic. Now it's time we get into the topic for tonight. Before we do, I'd like to share a quote by Harper Lee, who is a famous novelist. You may be familiar with one of her titles, To Kill a Mockingbird. Harper Lee said, "Many receive advice, only the wise profit from it."
Well, that's a perfect segue for tonight's show, isn't it? I mean, we talk to people about educating themselves before investing in the stock market, don't we? And but as the old saying goes, you can lead a horse to water.
Well, you said it, though I think most of our audience are far smarter than that, which leads me to tonight's topic about investing in stocks with a potential for a 20% return. I think it's important to pay attention right now as reporting season is just around the corner, so we'll give you some of our tips on reporting season. We'll also share our view on what the results will mean for stock prices.
All right, Janine, now reporting season is always an interesting time on our market, and I know it's important that we prepare for it. Now, in doing this, we will share a handful of stocks likely to experience 20% growth in the year ahead. So we have plenty of stocks for our YouTube video viewers, and I assume, like you have in the past weeks, we have bonus ones for our Talking Wealth subscribers, I would think, tonight.
Absolutely. Before I get into them, I want to ask you if you have observed signals on lots of stocks at the moment, as many stocks set up for a 20% return plus in the year ahead and into 2024.
Are you serious? I've been watching.
Well, you had one, Paladin. That was a really good one, wasn't it?
Well, it is. It's not just one. I looked through the top 100 stocks, probably took about an hour, this afternoon, and I went, wow, wow, wow. And I think I
Starting to
wrote
get really
down
interesting.
12, and I was looking at each chart for 3 seconds. So if I took about 6 seconds, I'd probably find another
Beautiful.
12, I reckon. But yeah, lots. There's a lot, and it's really exciting. I mean, I do get really, really excited when I start seeing this, and I suggest that everyone should be on the lookout for stocks with good potential for growth. But can I say many go about it all of the wrong way? So can we find out what's next, Janine?
I'm patiently waiting for you to share these stocks, by the way, that you were looking at. Are you going to do that?
Oh, well, ladies first, Janine. Besides, I keep mine for my Monday stock market report on Talking Wealth. So let's not dawdle any longer, as reporting season may be over before we stop talking about it. You know it's just around the corner, so can you please tell everyone what your view is on reporting season?
Well, there's no doubt short-term headwinds exist for some stocks, but we expect this to turn around in the year ahead.
Now, I assume you're going to say a little bit more on that a little later, but let me ask you, when it comes to the stock selection, which tonight is all about, is it a case-by-case basis, firstly, and in your opinion, would it be wise to keep an eye on those sectors with the lowest growth so far this year, such as ones we've talked about in the past, like energy, financials and materials?
Is that a trick question? Of course. We all know that a rising tide lifts all boats.
Yeah, well, what if your boat's got a leaky hole in it? It might
Wants
float
to
up,
plug
but,
it.
I find that with a lot of traders, they have these great boats, bull markets, they float up with everybody else, but their boat or their trading plan or strategy has holes in it, and so their boat starts to leak and starts to fall away.
Right. Okay, Dale, let's take a look at what Morgans have said about reporting season.
Okay.
Morgans say key themes to watch include financial year 24 earnings trends, higher interest costs, cyclical signposts, consumer demand, industrial margins, small cap performance, short selling, and positioning in resources. So there's a few key points.
I think it's that they just said everything, didn't they? I mean, it doesn't really matter what the analysts say, does it, Janine? There are always surprises, and I'm sure this reporting season will be no different. Now, what to me, or what's more important, is what we do with the information and how we profit from that. Now, I know that in most years, it would be unusual for more than about 50% of analysts surveyed to be right in their analysis, and most of those would be fundamental analysts. So essentially, predictions are often inaccurate.
So what can investors do to prepare for what could happen this year, and how can they capitalise on it?
Well, that's a good question, Janine. Now, from what I'm seeing is that there will be some great opportunities because some really good stocks have been oversold due to the uncertainty around interest rates and inflation, but there are also some risks that we also need to consider. The lower liquidity of the share, the greater the risk we take in investing in them. So the best way to mitigate risk is to prepare in advance of reporting season. So in order to assist everyone, we have put together 5 tips for you to prepare you for the reporting season. Now the first, I think we've got a graphic up now, the first is make sure you have good quality stocks in your portfolio, first and foremost.
Exactly. Now, quality stocks, Dale, will generally rise to the top and are less likely to fall out of bed in the event the market did not like the company's or the sector's results. And it is important to remember that stocks are being judged based on the sector expectations as well as the individual performance of the companies. Now, on the flip side, with bigger stocks, you're more likely to be able to buy at a reasonable price.
All right, that brings us to number 2, Janine. It's only make assumptions about how stock prices will unfold based on the application of proper strategy.
Now, this is a good one, Dale. So what we are saying here is make sure that you have a proper, well thought out process and strategy, and most importantly, know how to apply the analysis properly. If you have any doubts, work with someone with knowledge so you become confident.
Good. I like that. Number 3 is prepare your trading plan for an exit in advance. Now, although overall results for the Australian market this year are or is likely to be more positive, some stocks may have been sold off, or some stocks may be sold off if the market doesn't really like the forecast. Now, we've all seen what happens time and time again in that situation, so be prepared for growth, but you also need to have an exit in case the stock you own falls heavily.
This means that you need to have a good set of rules that you have proven work. Most importantly, your flight plan should be designed to keep you safe in the market.
I like flight plans. Now remember, include information about earnings past and forecast in your plan so that you can compare this to the results that are just being announced.
Now, Dale, how about we share one that most don't talk about?
You sure? Okay, now that would be number 4, Janine.
You can count.
Okay, number 4 is the major one. Now, this is the most vital one, I really have to say that. And document the strategies you will use to manage your psychology. Now, we encourage you to do this so you don't get too caught up in the hype and become like a deer in the headlights. And remember, you can't control what the market does, just what you do. That means whilst you are unable to control a company's results, you can actually control how you make your decisions. So you ensure you have a proper processes in place, and that means, as we keep repeating week after week after week, is having good rules to buy and sell. This is vital to making healthy profits and consistent profits, and importantly, holding on to your profits. Now, number 5 is never buy into a company just because the results were good. Now, we get so many questions about companies that have had good results and the shares fall away.
That's so important. Dale, how often do we get calls and emails asking why the price of the share has fallen strongly when the results were actually good?
Lots and lots and lots. And also, why did the stock go up when it had a bad report? We get a lot of that as well, don't we? You know.
Yeah, unexplained things. Remember, most emphasis is placed on forecast results. Often a company can report a great result and the share price falls because the forecast may not be in line with analyst expectations.
What's next, Janine?
Okay, I'm glad you asked. Thanks for being so polite tonight, by the way.
I'm always polite, Janine, except when I'm not, now, which may occur soon if we don't keep moving on.
Yeah. Okay, let's get into it. Now, armed with our 5 tips, you are prepared for reporting season. Let's get into the charts and share some stocks with everyone.
So what are we looking at?
I was waiting for you to say that. All right, on the screen there, we've actually got Adbury, which is the
Adbury,
which is the stock that was up for the hot tip last week.
It was, wasn't it?
And take a look. What I really want to do is set the scene. So what we're about is looking at this differently.
Okay.
So it's not like we're sitting there looking at what CommSec say about what reporting is going to be like for NAB.
Well,
You know, we're about looking at stocks and saying, okay, what's the potential here based on what's happened in the past?
to make 20%.
To make 20%, right?
Yep.
So the idea is to pick out stocks that are, the history shows that it's been easier to
So
make
it's not Telstra on your list?
No, well, Telstra could be good going forward. I'm not saying that, but I didn't pick Telstra. I picked a couple of other different stocks
Well,
to
I'm
look
just
at.
saying it's a stock that potentially make 20%.
Yeah, that's right.
But so over what time frame we're talking
But
about? The next year?
It could be a plotter, right?
Yeah, well, what time frame are we talking about? A week, a month,
This
a
year and into 2024. Weren't you
Okay.
listening?
No. My wife tells me I don't listen any time.
All right, this proves it, doesn't it? As it's recorded as well, so we can replay it over and over again.
Don't you dare.
All right, now looking at what happened in 2009, we can see for a start that ABC, which is the stock code here, went up 108%, 62%, 47% off this low. This is the next one in July 2011. And then we've got a smaller one here off the low in 2012. But what we can see is consistently there are decent rises that we could potentially be in a stock and not get flipped out of and be able to lock in a profit. So
Or
this
you
is
stay
a
in
way.
long term and get a lot more profit.
So there are some stocks that may have had, great potential reports coming up, but the charts just look horrendous in terms of making it easy for people to try to trade it.
Yep.
Even off these bottoms in a bear market where we had the COVID sell-off, we've got decent moves up, so 104% up and 71% up. But off this recent low, we've already seen a 58% rise.
I think there's a lot more to go on that one.
This is the early days, isn't it? So this could be something that you're able to milk over time if the trend takes off and it starts going. So that's why I think this is one that's good for the list. But the point is to know how you're going to extract that return, and that requires a good set of rules.
Well, I find that's the case. I saw a lot of traders go, I'm good at picking stocks that go up and I'm not good at keeping the money.
That's right, and that's the key, isn't
And
it,
that's
to be
the
able to
key.
do that. Yeah, so look, that's ABC, that's interesting. Now we go to BHP. So a lot of people like BHP. So it's one on your list, but you may not have ever looked at it in this way. So if we do apply the same thinking that we had to the previous stock, and we just get familiar with what BHP is capable of providing you. So that's 98% to that first high. There's 45%.
20% for BHP in a short term is
Yep,
just
to get
normal.
20% out of this, how is it possible? Yes, this is what the chart's showing us, that we could do that out of BHP and do that consistently, whether you stop there or there. And again, we've got more recently, which it's just looked horrendous in terms of some of the actions, the selling off of the stock, but the rises on this stock show that there'd be enough in there that you'd be able to lock in a little return for yourself. So look at that consistency, 66 and 60% returns. Let's see what came up after the low in October. What's that, 2021? Another 50% gain, and we've seen similar on this rise here. Am I expecting anything different off this new low here? I'm expecting a decent rise out of this low.
But it's the consistency that you're talking about here, isn't it? I think, because I know
That's
a lot
the
of
point.
people love, our most popular shows are when you say the top 5 stocks under $5. Everybody wants to watch that because
Yeah.
everybody thinks $5 stocks are going
really-
to do better than everything else.
It's really not the most important thing to focus on, is it?
No, because it's like you want consistency. The consistency gets you the profits over the long
Yeah,
term.
so the prices are relevant is what you're saying.
Yeah, because all the time you see somebody looking at a stock that's 6 cents or 5 cents or 3 cents and they go, wow, it went up 1,000%. You go, great, how often are you going to do that?
Yeah, exactly.
Because they get it wrong more times than they get it right. But we
Yeah.
want consistency. That's what you're talking about here.
Yeah, so I was actually wanting to show a spreadsheet so that everybody could have a really good
You're
understanding
wanting,
of
but
that.
you're not going to.
I'm not going to this time. I'm saving it for another show. And the reason being is because when we do analysis, and people have heard us talk about back testing before, it's how you actually analyse that result. It's not just the result of the back testing that's important, but it's
Yes.
how you forensically, I guess, look at it to determine whether that's the stock that's right for you. And
We've got to
is this-
analyse the data
Yeah.
and look at it.
Is this going to provide, the sort of return that we're talking about
Okay.
over time?
So another stock?
So another stock, Bank of Queensland's an interesting one. I'll just open that up. I've got a weekly chart, but I want monthly. So we were looking at Bank of Queensland. We're looking at it over time. So
Can I tell you something? Can I interrupt you?
Yes. You like this stock?
Not just this bank. There's I've looked at all the big 4 banks today, plus Bank of Queensland, plus Suncorp.
Yep.
All look super fantastic.
Okay, great.
That's how I got really excited today. I was
Fantastic.
bouncing
That's
up.
what we
and
want to see,
I
isn't
got
it?
my gas lift chair was bouncing up and down as I was looking at stocks, like those doof cars.
No, please don't.
I just didn't have the music though. I was listening to some classic rock, but not. The
Did you
doof,
have your
doof,
sunnies on?
doof. No, I was looking at stocks.
That would look really cool.
I
but
just stick
don't
the
know
thing
how
on the
other
3
vision-
seconds and I was just looking.
The vision's not
But all the
quite
picture
I was hoping
seriously,
for.
I'd say to everybody, go and look at the banks because they're all
I
looking
agree.
really good.
Well, look, let's just get onto this one then. Stop talking.
I'll just shut up and let you
waffle.
go.
All right, so if we have a look at the rise off this low here, you can see 114% gain. That was out of the GFC pullback. But just have a look at the consistency of this stock prior to the GFC, 90%. So similar sort of order. Another one, there's about 77%. Even the last move to the high, depending on your rules, would determine how long you could hold it for. But
So what you're
40 odd
saying is having good rules for buying and selling around
Good
some
rules
of
we've
these
already
stocks.
said are really important, but
Yeah.
have a look at the way you need to understand the stocks that you're trading and understand it. It's not when they come out and they talk about results or what companies are expected to achieve in the years ahead. It's not about that. It's about having that connection with the stock over time so that you can extract the best out of it, not just waiting for a, what do you call it, a hot tip at reporting season time and then just taking the one off. You don't want to be in it for the short game, you want to be in this for the long game to extract the most out. And if we're looking at the rise off this low in, what's that, May 2012 even, 60 odd percent. Even in a bearish situation where the stock had been sold down, this was going back into November 2016, so we're talking about the Royal Commission. There was a 40% gain over that period into the high in October 2017. Then we saw the big flush out occur after the COVID pullback. Again, is this consistent with what we're used to seeing? There's 100 odd percent
And
return.
this is looking seriously good at the moment.
Yeah. I really like this as well. Just watching this very carefully and just look at the volumes over time. There's some really good volumes in this stock, so I'd be quite happy to trade that one. It's a nice little.
I'm excited about.
Okay,
things.
so BlueScope Steel is another one.
I'm glad you brought this stock up.
I know, it's interesting, isn't it? Historically, over time, I probably wouldn't go back that far as the GFC, given what's unfolded here, but if you want to, you can. It's up to you. I'm more interested in what's been happening over the last since 2012.
But this trends so well.
Just look at the how it trends so well. You're right, you actually hit the nail on the head. If you can find a stock where you can put one of Dale's trend lines underneath the rise, you're more likely to be able to stay in the stock, and that's really the point.
This stock will do 20% in the next 6 months, no problems at all.
I was having a conversation with one of our students in an email, and they were talking about trend lines on the monthly chart, and it was just so interesting to see.
They kick ass.
Yeah.
Am I allowed to say ass?
Yeah,
What's kick?
Yeah, because they're actually focused on the long game, not the short term volatility. So you can see there's some really great returns on BSL over time when it gets moving. Now, if we have a look at the rise out of this low, it could stop here. There's a possibility it may find resistance and fall away from there. But if it starts heading up and we get some sort of degree that repeating the past, the mind boggles as to where it could go, doesn't it?
Going to go, yeah.
Yeah. So that's another one, another really good one.
Love it.
So the question is, can you make a 20% return out of those stocks we've just looked at? And you've got to be able to make that out of
last week I said a word that somebody laughed at because it was the one you said, are you allowed to say that? I'm just going to say hell yeah.
Well, yeah. And it's much easier
it's still a four-letter word.
It's much easier to make it once the market starts moving as a whole, which is what we've been waiting for so long, because our market's been sideways for so long. But once that starts moving and then gets going into this next bull phase, people will need to start thinking of not get too carried away with the profits that they're making.
But they need to be looking at it now. They need to be learning now and getting ready for it. Because otherwise, you said, all ships rise on the same tide, but it also marks people with poor strategy and poor planning.
Well, if they don't prepare now, and they'll make the gains, but then they'll end up giving it back.
That's correct.
And that's what we don't want people to do.
So Goodman, I love it.
Goodman, you've got to like this stock. So there's a lot of upside here.
Oh, yeah.
And you can see there, if we get rid of, look at the history of these property stocks, they fell most dramatically.
About 90%, didn't it?
Yeah, in the GFC compared to other stocks. And you perhaps wouldn't have thought that was ever possible, but it does happen, obviously. So I've just lost the mouse here. What's happened?
No, you're still using it.
No, it's not working. But anyway, there we go. It's now deciding to play ball again. We're looking at returns here now. You can see even these small moves are 40% on Goodman. I just moved from one low to a high. See, look how consistent this is. And that's one of the things that you should be looking for, a 40% return again. Now, coming into that high, something changes. It moves out of that repeatability. And then we see 100% on the rise out of the COVID low. This low here in March 2021, another 40%. So if I look at what's happening with GMG, I can put a move up here. I've seen 34%, 40, could it go higher than that? Possibly 43%, but our analysis suggests that it's probably more likely to head up here somewhere where this previous resistance is. So
yeah, look, I agree with that. There's easily 20% in that in the next couple of months.
Yeah, so that's what you've got to look at there. Now, I've got an interesting stock here. This is one out of the box. So you'd look at that and what would you say?
Yeah.
Yuck.
Is that a good word?
Is that a technical
It's a highly
term?
technical word. Yeah.
Yes, it's not an acronym for anything. It's just, okay, so, but if we look at what I was describing before, but you look at this and you think, well, you'd never trade it. But if you look at it in this light that I'm trying to explain now, you would change your mind. Even Dale would.
This is a monthly chart, so I'd have to work out a strategy on a weekly chart.
Yeah, exactly. But you're just looking at, look, the challenge with the monthly chart is there's no way to get out of it once it gets to the top. But this is the beautiful thing about doing this inspection of the monthly chart to understand the personality of the share and what you need to be aware of. So there's a 27% rise to that high there off the low. And where do we go from this low? We go 30-odd%. So can you make 20% out of these smaller moves? Yeah.
So if that breaks the 370 area, you're suggesting it'll break out of that whole move that's sort of sitting around 370, 380.
Well, we've got to look at this first because it's already gone up our 30-odd%.
Yeah.
Generally, it might only go down 1 month, 2 months, 3 months, 4 months before we get the
But
next
that doesn't
move
look
up.
like it's going to go down too much because it's gone down a little bit.
Well, it might buck the historical
Because it's
trend,
gone down a
mightn't
little
it?
bit. That's what I'm saying is if it gets
It's
through
about
here.
to launch itself into a big rise, acceleration.
Yeah, so if it trades up and closes up here before the end of July, which is only in the next week, and then we start seeing you move up next week, then it's highly likely going to break through that. So getting 20% out of this won't be that hard.
Well, look, we know that sometimes when stocks break to new all-time highs, they turn and reverse, and then you've got to wait for the
they
next
can,
move up.
but this is Medibank and it's on your list.
But it's reduced. So I'm just saying that even with this one, which doesn't have the huge stellar gains of, say, a BSL that we saw on those bigger moves, it still has some good moves. I could look at this low down here in September 2020 and back up here, and I've got 40-odd% if I'm able to hold it through there. But then again, it just depends on having some very clever rules to do that, doesn't it?
Yeah, which means you need to understand the rules and be able to apply them correctly.
All right, so let's move on to National Australia Bank. Now, NAB is really interesting. This is the dog stock of the banks, right? Until
it is.
recently, the
But even
recovery
this
out
looks
of COVID.
interesting.
Even this looks interesting, right? So, I mean, you just sort of look at this level across here and think, that does look interesting, as Dale was saying. But we can then have a look at, well, what's NAB's personality telling us? It's saying 105% there. It's showing up here we could potentially see 74% there. And I'm not marking all of them, but just let's have it. Even when it turned bearish to the Royal Commission, you've got 40% going up here. Prior to the COVID low, it
Well,
was
even
a short
AMP
move,
will do
32.
20% when it goes up.
Yep. And off the COVID low, this was incredible. There's 150% off this low here that we saw was probably the best run that it's had in more than a decade.
Well, long time.
And now we're coming to this point where it could be finding support. We could be on for the next move, but it's got huge resistance across there. So that will be the real challenge for NAB to get through all of that. It's going to take a lot of, it's going to take the whole market to move, and for a lot of people to get excited about the stock market for it to get through that resistance. But if it does that, where could it go? Well, based on what we've seen before,
Well, how far is it from where it is to that resistance?
Anywhere between 40 and 100-odd%. That's the all-time high.
But where is it from where it currently is to your resistance level? Like, really, I mean, you probably wouldn't enter right now.
We'll go to a weekly chart perhaps, and you might get a better view.
Up till that, you've got 20%
You've still
up
got
to
20%.
to the resistance level. So, going on to a weekly chart, if you've got a signal to get into it,
Yep.
there's a 20% rise even when we're not super sure. But I think this is looking really, really cool. I like it.
Okay.
So you want a quick 20% out of it, no problems at all.
It looks good, doesn't it?
Yeah.
Okay, so
And this is
that's-
not the best looking bank.
And we've got more. I was just about to launch into more, but I've got to save those for later on, don't I?
Well, you do have to say that for later on because we've finished our topic. Well, that is it for our topic for tonight. Now, if you are watching us on YouTube and you're interested in building your wealth, then it just makes sense to subscribe to talkingwealth.com, as you'll get access to hundreds of interviews with trusted experts from around the globe that will help you get more wealth in your life. So just head over to talkingwealth.com and get your free 7-day trial by visiting talkingwealth.com. Now, Janine, before we get into more stocks, I think it's time we get into the segment where you just totally lost it last week, and that was your What The segment.
Well, Dale, the title reads, Aussie cybersecurity company Tesserent exploring $176 million takeover.
Now, normally I'd say what the, but I'd say that here, but where's the what the in that? Or is this just one of those jokes that I don't ever get, Janine, after last week's discussion where you just lost it and kept laughing, which, by the way, many of our viewers shared with you. This is they reported being in stitches. That left me being the only sensible one running the show. Now, if you haven't seen last week's show, go and watch it because you'll see Janine just lose it.
Well, Dale, I thought I'd better return to my more serious side this week, and I found something very interesting, so much so that I said, what the? Now, you know how I love to talk about takeovers.
Oh, I remember the origin story where we covered that sometime back in our live show and I think it was on early April, like the 4th of April, on the best ASX growth stocks. Now, I declared not to mention it, as you do get that look in your eye like some crazy lady fighting over a Boxing Day sale when you start talking about that. So can you cut the suspense and change the subject and tell us why we should be interested in this takeover, Janine?
Okay, we have to go to one of the articles that I read first. This way everyone understands why this is worth a look. On your screen right now is the article I found on news.com.au that said Tesserent provides cybersecurity services to more than 1,200 government and corporate clients.
Government contracts. Now you've got me interested, as they have a lot of money to waste.
Yeah,
Or they waste a lot of money.
It happens, doesn't it? Well, Joe, when I saw that Tesserent has government and defence contracts and has acquired a number of companies to increase its earnings, while it had reported consecutive losses, in June, the Financial Review reported that it had posted a loss of $1.1 million in the first half of the last financial year, down significantly from $3.3 million the prior year. So I decided to look up the major shareholders of Thales, the company trying to take over Tesserent.
Okay, super sleuth. What did your sleuthing discover?
Take a look at this, Dale. The French government are a major shareholder of Thales. If the information I found online is correct, the French government, who last I heard fell out of bed with the Australian government over submarines, now around 26% of the company is trying to take over Tesserent.
What the?
They own 26% of the company, I should say.
Surely that's got to ring some alarm bells for the Foreign Investment Review Board.
Well, I'm sure the media would be having a field day if it was actually China. So I could not find an article mentioning that the French government holds a major stake, so perhaps I'm wrong. Next, I checked when the talk started, and initially it appears possibly in December 2022 and January 2023, because I wanted to see whether anything interesting appeared on the chart.
Okay, Ms. Sherlock Holmes, what did your sleuthing uncover on that?
This is how powerful charting is and how much it can reveal, and is just one small part of why you need to learn how to read charts properly.
All right, so we're looking at, this is Tesserent, yeah?
Okay.
And a monthly chart on the left, weekly chart on the right?
Yeah, so monthly chart is just showing three levels that through the analysis indicate that there is some strength there. Now, the strongest level of the three is actually this one here.
Yeah, I've got to put my glasses on
which
for that.
is around, it's between these two levels. So the strongest level is around 10 cents, and there's another one around 60 odd or 7
cents?
6 point something, 7 cents, yep.
Yeah.
And this lower one, which is where the share price fell to.
It's 6 cents.
Yeah.
Yep.
Now, what I found interesting when I was looking at this and I did the analysis, it's like unravelling something.
I know you love to unravel things.
So when I started applying the analysis, I thought, I wonder where the strongest level was, and can I see how that fits in with when the talk started.
Okay. Yeah,
right, so if we just look at the weekly chart to understand this.
Can you expand that up?
Oh, you're always asking me to expand.
Well, it's for the viewers, not for you.
Okay, not for you?
Not for me.
Okay.
I've got my glasses.
Apparently the talks started in around December or January. What do you notice about the chart?
Well, I started going up before the talk started, or around that time.
Right, so generally what could that indicate?
That people in the know
that
what's
somebody
going to
knew.
happen.
But what was really interesting to me is that there was such strong support. So the financials, which it's very hard to explain in this short time that we have, that the strength of that level is due to a combination of analysis, not just one line that I've drawn on a
So
chart.
there's a lot of strength across there for a whole year, pretty much.
Yeah, so in theory, my analysis was indicating that there was a high probability for the stock to actually turn there and have its low there.
Yep.
Okay. And then we saw the rise come off that. And then during this whole period, it's been sold down. So it fell significantly. Now, when the takeover was announced, they were announcing that there was a 155% gain from the actual closing price to the takeover price.
Which
That's
is misleading.
supposed to make people feel warm and fuzzy about the fact they're getting a good deal. But are they?
Not if you bought it at 30 cents.
My analysis indicates that it's really only a 25% premium. or 30%. Somewhere around there is the true figure for what went on. Now, what else happened? Well, it's a big
Well, it
question.
is. It's if it looks like a dog and smells like a dog, it's probably a dog. But to me, it smells fishy. I think there's something. I won't say there's something illegal there, but I'm just thinking, when people are in the know, what you're saying, and if we look at the chart, why would, if there's news about a takeover, why would it start dropping away?
Well,
And
see,
if
that's when the
people
talk started, but when the news came out, it was a
but if
different thing.
talks are on, it's not going down unless somebody's pushing it down for a reason.
Yeah,
So
very
I don't know.
interesting. And just have a look at the short sales on that. That was an interesting thing
I
again.
think we could talk about that for an
We
hour or
could.
so, because that was really interesting, Janine. Is that all you have?
Well, having reviewed many takeovers, you find that someone actually knew something. That's what it looked like.
Oh,
and
geez.
is it really a fair price for shareholders? And was the stock going to turn there anyway?
Well, it looks like that is it for our segment, Janine. Otherwise, we'll be here all day. Now it's time everybody gets another chance to give us a call. So you can give us a call on 92909988. We'd love you to pick up your phone now and talk to us personally. That's 92909988. Or you can text your question to the number on your screen. So make sure you pick up your phone now. The numbers are on your screen, so get texting, but we prefer phone calls. So please give us a phone call, because we'll always take preference over those.
Gee, that was quick.
I know.
Whilst we wait for your texts and calls, we will get into the next email.
Now our next email is from Tom, who says, "Hi Dale and Janine, I hope you and the team are well. The stock is One Click Group with the ASX ticker code 1CG. Now the question is, for early stage companies such as 1CG, at what point can a stock price surge be considered genuine momentum? This penny stock has surged 100% or thereabouts since mid-July, presumably on the rapidly growing registrations noted in several July ASX announcements for its tax return product. There isn't much information available on this stock, but its products look to serve a growing and poorly served market. Millennials with life admin needs such as low-cost tax returns, and Gen Xers who need wills. I'm considering a speculative buy at 2 cents based on the surge and need for such a company to raise funds to invest in platform growth and marketing to large addressable market. Views and discussion are very welcome. Thanks, Tom." I think he's asking a question that's like a piece of string. How
Yeah,
long
I
is
know.
it? Because
It's a big question.
you just can't gauge it. Just because the stock's risen 100% doesn't mean
Yeah.
anything on a little top stock like this. It's more
Well-
about consistent volume.
Well, for a start, just look at the historical chart. I mean, say it's flatlined, and then you go to the weekly chart, and it's just so illiquid.
It's so illiquid, correct.
And while the volumes have improved, and he's right that there is something changing there, it's just way too early to even think about putting your money at risk to help support a company that is, in its very, very early
But
growth stage.
Have a look at the volumes on this. If we just bring that up, look at this. There's, then you got bang, 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 and that's not that could be just somebody sneezing, so
Yeah.
to speak, if that makes sense. Somebody going, oh, could be a chat group
Yep.
saying, hey, get on One Click Group. I think it's going to have a takeover. It goes up, and then all of a sudden it goes right back down again. These stocks are real easy manipulated all of the time. So there's 6.6 million shares it opened at 0.08 of a cent. So you multiply 6 million by 0.08 of a cent. It's not too much money.
No.
So then literally I'd suggest you get your calculator out and type it in right now how much trading for that whole week it was. And look at this week. It opened at 0.09 of a cent and traded at 2.5
So it doesn't take
million
much
shares.
to move it.
So I'd suggest anybody
Could move
pretty
it.
much could move that stock 100% in a day or 2 days, and then try and get people with FOMO trying to jump in, and then they're selling out to it. So I think really not a smart strategy in my book. And I understand Tom's looking for a speculative buy. So
Yeah.
as long as you put money that you just absolutely don't care about.
But look for a speculative buy that's actually set up differently.
Well, you don't go and buy a stock
Not the
without hope,
story.
without the
not
goal
just
of
the
making
story.
money, do you? You really don't. And that's the point. You want to make
But
some
that's
money
why
out
he's
of it.
contacting us to get a perspective from a technical.
Yeah, I agree with that.
And
And that's what I'm saying is whatever money you would put into a stock like this, you would put it on with saying, well, if I lose it all, that's the way it is, and I'm not going to be
we
upset
covered
about
some
that.
of those sort of more speculative stocks that form. Can I just show something else on a different stock that someone's just wrote in about, just to give Tom an idea? But when some of these stocks make these sort of patterns, can you see that pattern there? That's when you want to be looking
That's
at
when you
getting
look at
in.
it. Yeah, it's much better ways of doing it. But Janine, we do have a caller on the line. I believe we've got Michael on the line, do we?
Yeah, hey, mate, how's it going?
Very good. Michael, thank you very much for giving us a call. Where are you from?
Hobart.
Hobart. I love Hobart. Yeah, I love it. I haven't been there for a little while. They won't invite me down there anymore.
No, that's the way it goes.
I've got family down there. I've got cousins and an uncle down there, but north of you, up around Launceston Way. But you've got a stock you want to look at tonight?
Yeah, I was wondering if you could have a look at Woolworths.
Fantastic. And do you own the stock?
Yeah, I bought into it back in December of 22.
Okay, so...
And I've got a
yep.
protect profit loss of $37.98 on it. Because it's just started pulling back recently, and I was just looking for your thoughts on which way it's going to go. And what to do.
Okay, so you've got a stop loss on it. Is that a technical stop loss on it?
I always go a couple of cents below a whole dollar because I don't like going for the whole dollar amount.
Yeah, that's smart.
Because I've noticed they usually drop just below it and then bounce back up.
Yep. Yeah, they do. That's the thing is, that's a smart move. Whole dollars tend to be those resistance or support levels. A lot of people do that, and you get the big end of town pushing prices through those. So that's really, really good.
Yeah.
So you're looking. So your goal is to hold it medium term or long term, short term?
I usually hold long term because I thought it was like a nice long plotter. I thought the market was going to go bullish and to get up to about 44, but
Yeah. Well, you never
it's
know.
just
It might
slowly
do
been
that.
plodding along.
Yeah. No, that's fine. Well, Janine's got it up. She's put a few
We can
lines
tell
on
him
it.
there's a secret reason as to why it's slowed down.
Okay, Janine's saying there's a secret reason why it's slowed down, and you have to ring her privately to ask her the question. Okay. Let's have a look at it, Janine. Thanks, Michael, for calling in. If you do want to be like Michael, pick up the phone and give us a call on 9290 9988.
All right then, Michael. Now we're just having a look at December 2022, and I'll just bring up, before Dale can actually say it, I'll do it ahead of time. How's that?
Yeah?
So December 2022, here we go. That's where Michael's purchased, somewhere around here.
He's done well.
He's been very quite aggressive in that purchase, and then it's fallen down for a couple of weeks, bounced, hit this important level, obviously because it's ended up coinciding with the angle of the trend, but it took off really well. But it's just this resistance here, Michael, at the moment that it's met, and it's just turned back from that. But the fact that it's got this line underneath it, that looks really nice, doesn't it?
Absolutely. It's just a beautiful little trend line.
All we have to see is it needs to get above the high of this bar here, which is, what's that, 39.15?
Correct.
That
Yes.
would tell us whether it's got the potential to take off and break through these highs at around, what's that, $40 roughly?
Well, I think Michael, because he's the first caller that's gone in, so he's going to get my book, Accelerate Your Wealth.
Oh, well, great.
So
You'll know
please,
the
Michael,
trend
make
lines
sure
then.
you email in and get the book because you have rung in, and that'll teach you how to draw trend lines. So I would be using that as a stop loss on this. It's a much better stop loss for you because it allows the stock to unfold and come back to its momentum, and if it does break this line, that will give you an exit signal on that. But I think it's been a nice little buy for him so far, and I wouldn't give up on it yet. I think it's possible it could just keep, if it might find some support through here. It's had a few weeks down, it's just come back down to the line, so whilst it may drop through that a little bit, I think it's got some nice little legs. I like this stock at the moment. Also like Wes too.
Well,
That's the other
Michael
one I
was
like.
being very cards to the chest. He didn't really tell us why he thought it was going to get to $44. Did you? You should have asked him.
Well, thank you. Maybe you can talk to on your private phone call with Michael, and when you talk to him about how he's doing what he's doing. How's that?
Well, we might have a surprise for next week or the week after, mightn't we?
Well,
About those.
what for Michael?
About different calls.
Okay, so that's anyway. But I
there's
do
something
like what
coming.
Michael's talking about with Woolworths. But anyway, that is
That's
it.
all we have on Woolworths. We hope you enjoyed our show on YouTube. For those watching on Talking Wealth, stay tuned for the bonus content that we promised. For our YouTube viewers, now it's time to show your support for the show, and this means comment below this video. Give us a big thumbs up and make sure that you're a subscriber so that you're kept up to date.
In next week's show, we're going to explore the best oil and gas stocks to buy, including Woodside, Santos, Ampol, Beach Energy, and others. We'll also take your phone calls, answer your questions, and so much more. So make sure you put next Tuesday night's show on your calendar. Remember to give us a big thumbs up by liking the show, and make sure you subscribe to the channel. What was your favourite stock from tonight's show? Comment below and tell us why you liked it. Thanks for watching.